write this down because this needs to go on an index card. In order for you to do taxes, the first thing you've got to do is establish what income is taxable. Write that down. In order to start doing anything with taxes, you have to find the taxable income. Or just put taxable income is priority. You got to find out what amount of money is taxable. So go ahead and write these boxes down. You got to know the difference between gross income and net income. You got to know the difference between taxable income and tax breaks. So you take your gross income. What is your gross income? Your gross income is what your employer contracts that your check is based on. In other words, just think of a gross income as a contracted value. I'll never forget when I started at Tri-County Tech, that was my first career job. In other words, put away the part-time jobs and put away the working for my father for years and all that. My first career job at Tri-County Tech, and they handed me a contract, and at the bottom of it, it said $32,000. I thought I was rich, okay? Because that was my contracted value, $32,000. Now, is that what I was going to bring home? No, that's your gross income. Your gross income is your contracted value. Now, you got to take your taxes out. You got to take your insurance out. You got to take your federal income tax. You know, you got all that junk you take out on your check stub. And that leaves you with your what income? What is the gross minus the adjustments? What's that called? It's called adjusted gross income. But what does a lot of people call it? Not gross, but what?
Taxable?
No. Starts with an N.
Net.
Net. Okay, so I'm going to pull up my handy dandy while y'all are still working on this. I'm going to pull up, we'll go back to this in just a second. So your gross income is what you're contracted. How many of you have a teacher for a parent? Anybody? Anybody want to volunteer? Just say, I do. I have a teacher as a parent, or a parent as a teacher. Anybody? There's nobody in this room that has a parent as a teacher or a teacher as a parent. Nobody. Nobody at all.
I don't.
Okay, well, at least you said you don't. The rest of them are just sitting there. Okay. Does anybody know what it's all about with teaching? It's all about the what? The contracts. Okay. When you're a teacher in K through 12, that's all they worry about. Contracts come out this date. Contracts come out. We got to sign the contracts by this date. And then by next year, the contracts comes out for next semester or next year. I got a couple of teacher friends, and my sister was a teacher for District 5 at Centerville for 500 years. And it's all about the contracts. So whatever your contracted value is, that's your gross income. The net minus taxes, insurance, and so on, and that gives you your net income. And that's your take home what? take-home pay. In other words, that's what you deposit into the bank. You get a check, your gross income minus your taxes and your insurance, and you get, and this is on your check stub. And you get a net income. Now, there's other things that go into taxes. What do you mean? Well, let's go back to the handy dandy. See, most people just think in terms of this. Okay, that's all I need to know. You know, the difference between gross income, but there's other things that go into the taxes. What are they? Well, you've got other income that comes in. What do you mean other income? Well, let's say that you rent. Let's say that your grandmother passed away and she left you her house, and you already got an apartment, and you don't want to leave. You don't want to leave that apartment because you like it and it's small and it's easy to take care of. But you got this house and you don't want to sell it because it's your grandmother's house. So what do? You rent it. You rent it out. Well, that monthly payment that they give you for that house, let's say you rent that house for $1,000 a month. Well, that is considered income. Let's say that you got stocks and you sold $5,000 of stocks last year. That is considered income. Let's say that you made money on stocks. That's called dividends. That is considered income. And all of that comes in to play with your net income or your paycheck. And that's this adjustments to income right here. Deductions and exemptions. We're gonna talk about that. All right. Other income is considered dividends. And I don't know how to spell dividends, so I'm just going to put dividends. Does anybody know how to spell dividends? I don't know how to spell it. Dividends, I think. I don't know this. That don't look right. Anybody know how to spell dividends? Dividends, renting, in other words, renting houses or apartments, selling stock. Anything that comes in to your pocket.
Mr. Hubert,
Yes.
I'm pretty sure that's not how you spell dividends.
I know it ain't. How you spell it?
Isn't it just like divide and then ends?
Well, we'll do that. Divide. Let me look it up right quick.
Yeah, that's probably
it's not one of those words that I use a lot. So let's look it up and see. Because hell, I don't know. I'm not going to lie to you. I'm not going to sit here and be one of those teachers that say I know everything. Divide and ends. I think there it is right there.
I believe so.
Is that it? Dividend. Yep. It's divide and end. Divide and end. So I was only off by one letter.
Yeah, you're close.
All right, there we go. Let me fix that now. Thank you, whoever said that. Who said that?
Gil.
Okay, thank you, Miss Gill. I was kind of hoping it was somebody different, but I know that's dreaming. But anyway, other income, dividends, renting, selling stock, anything that comes into your pocket. Could you have a second job? Yes, a second job that doesn't. Let's say that you make $30,000 a year as a teacher, but you work at, what's the place called up there? The Wings place up there on 85. Oh, what's it called? I can't even remember the name of it. But anyway, they sell wings. Oh gosh. Not Charlie T's.
Sue's?
Wings, Firewater. Chiefs. They still have Chiefs wings and fire and water up there.
I have no clue.
It's right up there on 85 and 85 and Clemson Boulevard, where Cracker Barrel is. I thought there was a Chiefs wings and fire water up there.
Oh, Wild Wings.
Wild Wings, that's it. I couldn't remember the name of it. All right. You know how you blank out, because of clothes or whatever. All right. Whatever the wings place is, that would be a secondary income. And please, don't get me wrong. I'm not trying to insult your intelligence here. I'm trying to get you to understand that in order to understand taxes, you've got to have these definitions down. Okay? That's all I'm trying to say. Expenses. If income is anything coming in, then of course, expenses is anything what?
Going out.
Going out. Okay, now these are some things that you could write off. Like your books, like your tuition, like your student loan interest. Like your mortgage interest. And, in case you're paying alimony. Okay? Those are things that you spend money on. What about fuel? Well, if you work out of your car a good bit, I got a cousin that lives across the road from me, and she's a travel nurse. And where does she spend like 50% of her time? In her car. And she's got a very reliable car. I think she bought a Toyota or something. She buys a new car like every 2 or 3 years. I think she leases it. And the reason she leases it is she wants to get a new one every 2 or 3 years because her life is on the road. And that's what she wants to, that's her office. So that would be fuel and probably her payments, car payments, since that's her job. A lot of this stuff can be written off as far as expenses. So you got to know what's the difference between income and expenses. And then there's called tax credits. And this is taken off, well, actually tax credits are taken off government breaks before, or let's say, I think it's after, after you go through the brackets. Okay? And I like to put in here robbing Peter to pay Paul. Robbing Peter to pay Paul. Let me ask you a question. Let's say that Miss Gill, since she's the only one, or Miss Stewart's the only one that talks in here. Let's say that Miss Gill owes me $5,000. Okay, she's a friend of mine, and she had to buy a car, and her car broke down, and she had to go buy a car, and she borrowed $5,000 from me, and I told her to pay me back whenever she got everything back together and everything good, and she pays me $3,000 back. So Miss Gill borrowed $5,000 and she paid back $3,000. Everybody with me?
Yes, sir.
And let's say that Miss Gill, let's say that she had $2,000 left to pay me, and I just told her that instead of her paying me, she could give me her old car. Okay, instead of the $2,000 she owes me, instead of that, she just gives me her old car. All right, is that the same thing as paying off that $2,000 that she owes me by giving me that car? Yes. Okay, if you agree to that, then that's what that is. A tax credit works the same way. Let's say that you owe Uncle Sam $2,000 in taxable. That's you owe $2,000 in taxes. You finished your brackets, you've taken out your expenses, and you owe Uncle Sam $2,000 in taxes, but you got solar panels on your house. And solar panels equals a $500 tax credit. Well, what does the word credit mean? That means they're putting that toward what is owed. So now, instead of owing $2,000, what does this person owe to Uncle Sam after the tax credit? $1,500. So a tax credit is basically money from the government off of your taxes. All right, so that's the difference between a tax credit and an expense. All right, so I want you to. Why is that mute all button? Why is it blinking? Okay.
What button?
My mute all
Mr.
button.
Hubert, I have a question.
Yeah.
So what's the difference between like a tax credit and a tax deduction?
A tax deduction is taking off of your taxable income. Okay. That's back here.
Okay, got you.
Back here with deductions. I mean, we're going to talk about that. It's after expenses. After you do expenses, then you do deductions. And deductions and exemptions are done right before you go into the tax brackets. Okay? Deductions, I don't even do deductions. I take the standard deduction. You have a choice, and we're going to get into this. You have a choice between taking a standard deduction and keeping up with your receipts. I before E, except after C it, and I don't know. Okay? All right? There is no way in Hades I would be able to keep up with receipts. So I take the standard deduction on my personal account. Now, the farm account, Tractor Supply, your credit cards, whatever, they send you a yearly statement for your income taxes that have, like at Tractor Supply, everything I buy at Tractor Supply is supplies for the what? For the farm. So that goes off as a deduction. All right. Everything in my house as far as dependents, that goes off as an exemption. Now, I don't have dependents because my ex-wife claims the dependents. All right. So what I'm trying to say is this comes off after you do the expenses. This comes off. And then after this comes off, you go to the brackets. And then you go through the brackets, and then you take off the tax credit. All right. So to kind of to kind of whittle this down a little bit, one, you've got your gross income. Two, you find your net income. Three, you deal with expenses. I don't know how to spell expenses. When it comes to these C and S words, I suck. I really do suck. Expenses, I don't know if that's right or not. Expenses / exemptions / deductions. They kind of work all in that area right there. And then you go to the brackets. And then after you go to the brackets, you worry about your tax credits. Now, I'm going to tell you right now, you don't get very many tax credits. All right? Solar panels cost like, I don't know how much it costs, but it's pretty expensive. But you only get like a $5,000 tax credit or $2,000 tax credit by putting up $15,000 worth of solar panels. They work and they help long-term with your long-term, paying your bills, but it's kind of a upfront payment. And tax credit you get, I think you get it like for 5 years. So it kind of helps pay for that. Tax credit would be like solar panels and electric car, that kind of stuff. And then after you do that, after you do all of that, that's what you owe Uncle Sam. Then you take out minus what you owe, you minus your FICA, your taxes off your pay stub, and that stuff that they take out, not the insurance, but the taxes that they take out on your pay stub. And if you have a positive number, that means you're going to get a what? A return. What if it's a negative number? What does negative mean?
That means they owe you, right?
You owe Uncle Sam.
Or you owe them.
Yeah. You owe Uncle Sam money. And you have to pay more taxes. You have to pay taxes. Okay? Now, some people, like, for instance, on my check end, I take out for dependents on up here. I take out for dependents on my gross check 3 dependents. Now, why do I do that? Because that way I give more money to Uncle Sam in my check. So therefore it comes out down here and I end up having a return. I just now got my return in my bank account this week. Okay. And I also take out extra. I take out extra. Some people do that. Why? Well, to make a long story short, a long, long time ago, I always used my return for kind of like my summer vacation money. And I just keep doing that. And plus, once you're set in your tax brackets and once you're set in, unless you're going to be, somebody like Michael Jordan and go from making no money in college to making millions and millions of dollars and then adding billions with Nike and another million with Hanes and another million, unless you're going to be doing something like that, you're pretty much going to be in a familiar bracket. So your return is going to be about the same every year unless there is a major change. So therefore, a lot of people are used to getting that what? Return. Same thing goes with owe. How many of you know somebody that owes Uncle Sam money? You hear it on TV. they garnished my wages because I owed money on my income tax. Well, that's usually because you don't take any dependents, zero dependents, and therefore more money comes out of your paycheck, or more money is in your paycheck. So if you do zero dependents, that means more money is going to be in your paycheck. And therefore, you're not paying Uncle Sam per paycheck as much. So this FICA and taxes, it goes down and it doesn't pay this, what you owe, and therefore you end up owing Uncle Sam. Now, this is kind of a nutshell, and the brackets are percentages. Those are your percentages. But that, as you can see, we haven't even done any numbers yet. You've got to learn how to put this in order. And that is what we're going to do now. We're going to look at the slides and show you what I'm talking about. Believe you me, I'm trying to put this in layman's terms, and there is a reason I'm trying to put it in layman's terms, because some of y'all have never seen this before. All right, so here's a simple example. Karen earned wages of $38,000. I would suggest you write this down. You don't have to write it word for word, but you can write it like the gist of it. Karen earned $38,600, received $750 in interest. Notice that word received. So $38,600, and that's going to be plus $750. And contributed $1,200 to a tax-deferred retirement plan. And she deferred, let's see, she contributed $1,200 to a tax-deferred. I think I got one of those. I think I did two. I think it's $200 a month. Tax deferred. It's 1F. And she was entitled to a personal exemption of $40.50. And two, that's supposed to be, isn't that supposed to be, looks like TWO? Wouldn't that be two? TWO, I think that's a typo. And two deductions equals $63.50. Find her gross income, adjusted gross income, and taxable income. All right. So I'll give y'all a couple more seconds to get that written down. Everybody good? Everybody got that?
I got it.
I got it.
Yeah.
Okay, got two people. That's good enough. All right, so you're going to add the 750, and that's what I was doing on my page right here. You're going to add the 750. Now, why are you going to add it? Because it's interest. Is interest taken away from you or given to you? It's given to you. Banks give you interest. All right. So that's going to be 0, 5, dang old 13, 39. So that's going to be 39,350, and that's her gross income. Contract and interest. So she brings in, now what if she was renting out 2 apartments at $500 a month? Well, that would be in here also. You would take that 500, multiply it by 12. That would be 6,000, and then 6,000 or whatever it come up to be. And that would be in there, 12,000, that would be income also. Her $1,200 contribution, let me ask you a question. If you contribute, does that come into your pocketbook or does it go out of your pocketbook?
Out.
Out. You pay, if you give a donation to the church, the key word is give. You're giving a donation away. I give $100 a month to Tri-County Tax Foundation. So at the end of the year, I get a statement from Tri-County Tech that says I give $1,200 a year to the foundation. That is just like this. Also, if I give to my insurance plan, I give, like I said, $200 a month to my 401k. Boom, that comes out. So I'm going to take that $3,950 and I'm going to subtract the $1,200 because that is contributions. And that's going to give me, wow, look at that.
Major typo.
You know what? That's pretty sad.
Mm-hmm.
I think somebody needs to tell them about that. Oh, I don't make these slides. Somebody check with the calculator. Is it 38,715? Somebody look and see.
I got 38,150.
Okay, 38,150. 38,150. Okay, now what I'm going to do here, I'm going to take my handy dandy pink highlighter and I'm going to highlight that. And then I'm going to take another highlighter. I'm sorry about that sunlight that's coming in. I got to get that. I got to get some tape and fix that. That's driving me crazy. All right. And the $1,200 contribution, that's going to come out right here. So I think we need to put some words when you see the word interest. When you see the word interest from now on, you need to think of a plus. When you see the word contribution, you need to think of a minus symbol because you're going to subtract it. Exemption is going to be a minus. Deduction is going to be a minus. So let's take it to the next slide. And then now you're going to deduct or subtract the deductions and the exemptions. So I'm going to subtract 4050 and 6350. And if y'all would check on your calculator, because after that last slide, I'm a little bit weary of, these slides. 27,750. Somebody check that, please. And I'm going to take my blue marker and I'm going to put personal exemption in blue. Did somebody check it with the calculator?
It's right.
Okay. Now, this is your taxable income. So I want you to put a circle around this, and I want you to put taxable. I don't think that's right. Taxable. I don't think that's right either. How do you spell taxable? I know this is awful, but I suck when it comes to some words. It is a.
That's right.
Okay. And it's usually the words that have a letter in between the two words, like E and I. That's where I mess up. All right, but at least I'm truthful with y'all. All right, there we go. All right, taxable income. That goes into the brackets. So when I say $250,000, this is pretty much where the 250,000 would be. All right. So I'm in the 27,000 income bracket. So what does the brackets look like? Well, I don't know if the slides are going to have the bracket. Let's see if they do. Let me go down here and look. Let's see. Where are they? There it is. Now, yep, there it is. Now, this is 2017. And for your homework and tests, you're going to be using this, okay? Because the book is, we haven't changed books yet. All right, so go ahead, and you don't have to write this down. I'm going to put it on full so you can take a picture of it. There you go. And that is your brackets. I'm going to give you a minute because some of y'all might want to write that down. I don't know. We only got like 1 minute left. And this is where I usually stop anyway, because we usually go into this on the second day of taxes. So I've got 27,750. So where does 27,000 fall? I'm in the 15% tax bracket. So every dollar that I make, 15 cents is going to 10 cents going, and 15 cents is going to Uncle Sam. And as you can see down here, there it is. It's 418,000. But now I think it's 250,000. I'm not sure. I got to look at it. 250,000 is 33%, up to 416,000. That's 33%. Do I think these are too high? Yes. I think they're too high. But why? Let me ask you a principal question as we close. What does this money pay for? You know, if you make $400,000 a year and you're giving 40% to the government, what does that 40% pay for? Name some things.
The military.
Military.
Social programs.
Social programs. What else?
Like the roads and stuff?
Roads, infrastructure, yes. The main thing is that you have to pay the employees in these government agencies, right? So if the government agencies start hiring people left and right, what's that going to do to your taxes?
They're going to increase.
They're going to increase. How many of you have seen on the state highway department 5 people with shovels around a pothole?
Yep.
Yep.
That's what I have a problem with. There is so much state and federal waste. I was in the military for 10 years. There is so much federal and state waste that some of this money that you are paying state taxes and federal, it's just going in the wind. And Thomas Jefferson once said that, I think it was Thomas Jefferson, that basically government could be too big. And that's where we are at. We've been that way for the last 20 years. Our government is way too big. And that's why our taxes are so high, because we're paying for so many employees. I'm not talking about, okay, let me go ahead and get this out of the way right now. I'm not talking about policy. I'm not talking about whether we should have this. I'm talking about nothing but employees. The bigger government grows, the more government employees, the more taxes go what? Up. And it's going to keep going up until you regulate the employees and the departments and the divisions that you have in state and federal government. Okay, we're gonna shut her down. Anybody got questions? Okay, right now, what should you be doing? You should be doing homework for A, B, C, and D. Well, you can't do 4A and B because I already shut it down. But C and D, you should be working on. What should you be doing for 4E? You should read it like 2 or 3 times. I'm serious. You need to read 4E before Monday, okay? So that is your assignment for this weekend, to read 4E, okay?
Yes, sir.
All right,
Okay.
y'all have a good
Okay.
weekend.
Yes, sir.
You too.
You too.
See y'all.